everybody, Facebook fans. We are now live. Kelly Lane here with Remax. I'm excited to have local lender here, Diane Martin in Anacortes. She's with Caliber Home Loans, and she helps all of our awesome clients get pre-qualified and close on their dream homes.
Yay! The invite.
Yeah, what I'd love to start with is Diane's been in lending for a long time. Diane, kind of tell us your background, how long you've been in mortgage lending, so everybody knows.
Okay, I'm going to date myself big time here. Well, I've been in lending more than a lot of your viewers are old. I've been in some phase of the mortgage industry for probably almost 35 years now. I started at the very, very bottom in reception and then processing. I had some different roles in management, but my true love is working with the customers, being a loan consultant, and just the structuring the loans, the financing, handling that piece of it. So I've been doing that part of it for probably the last 20 years.
Wow, that's awesome. So basically, you guys, she knows her stuff. So whether you think that you can't get a loan or you can get a loan, sometimes the first step is always talking to the lender and talking to somebody like Diane that can basically run the numbers and take 20 minutes and see if you can purchase a house. I think a lot of people are kind of surprised at actually how easy it is to get pre-qualified. I know we've seen some changes in our lending world right now with the COVID-19, and maybe Diane, you can kind of cover that. What changes have you seen over the last couple months?
Yeah, well, there's still a lot of programs that are out there, all the first-time home buyer, things like that. The most or the biggest change is there's a lot more documentation that's required. Mm-hmm. Income is obviously a huge piece because with COVID, there's been a lot of layoffs. There's been so income is huge, and there's going to be significantly more documentation that's required, whether you're salary, hourly, or self-employed. So the big thing to know is throughout the process, we're constantly updating income. So income at the initial application, during the process, all the way up until the day docs are sent to escrow, because someone could be let go during the interim. And the most important thing is to be honest with your lender, let them know what's going on. Besides that, the actual process itself is pretty much the same. There's been some credit score adjustments during the pandemic, where in a lot of programs they're looking at a 620 minimum credit score, but that still opens up a lot of opportunity to a huge amount of customers that would be out there looking to purchase a home. So those are the main differences. The big thing is for anybody that's looking at buying during this time, just have patience and a lot of cooperation as far as getting your docs in. Everything will go smoothly. We'll get you into your home on time by closing. So that's
so are you still seeing 30-day closings? I mean, it's still doable. Are you expecting a little bit more like 45?
It would be great if we could have the 40, 45 days. If we had to do it in 30 days, yeah, we could get that done. But again, that's going to be with the cooperation of the buyers, because we're not only talking our piece of it, we have escrow, we have the appraisers, and everybody is learning to adapt to our new normal, the virtual environment. Appraisers are having, a bit more, they have different things that they have to do. The escrow companies have different things that they have to do in order to accommodate. And everybody's working at full capacity very hard. So yes, we can get it closed in the 30 days. But again, it's going to be a lot of cooperation. When somebody asks for something, please provide it immediately. If you take 3 or 4 days, that's 3 or 4 days we've lost in meeting that closing date.
Yeah, no, that's great advice. So, and we're still seeing what are you seeing with the rates right now, the interest rates?
Rates are amazing. Government rates are under 3%. Conventional is in the low 3s. You've got still doing investment properties. Those are going to be obviously higher interest rates. But right now, even with everything that's going on, it's a phenomenal time to purchase. Rates are really good. There's a lot of loan programs that are out there and available. Like I said, the first-time home buyers, even our move-up buyers. There's definitely the programs.
So let's talk a little bit about that for first-time home buyers, because there's a lot of misconceptions. A lot of people think you've got to have, 20% down, but that's not necessarily true. So what are you seeing on your minimum down programs to get people into homes?
Well, we've got, there's still the Washington State Bond Program, which is the first and second, basically a zero down. We've got VA zero down, FHA's 3.5%, still doing conventional 3% down. So you have all those minimum downs. If someone doesn't have the funds, they can get gift funds from a family member. All of those options are still available. Again, someone still needs to be actively employed, can't currently be laid off or, on unemployment or something like that. We do need to verify full employment prior to closing. But if you are gainfully employed and you're a first-time home buyer, the programs are out there for you.
I know. And right now, you guys, when you run the numbers, and Diane's perfect to run numbers with, it is so much cheaper to buy than it is to rent. And I've had several calls lately too, where people were carrying notes and deeds with, a seller at a 6%. And I looked at him, I said, "Are you crazy?" I said, you need to go get a loan right now. You're locked in for 30 years and you're going to be at 3% if you have good credit and low debt to income. I was like, so you're going to cut your payment in half, and you're not going to have a balloon payment in 5 years to pay off the seller. And who knows what the rates are going to be like in 5 years. So I just keep encouraging people to run numbers with lenders just to make sure that, hey, you guys can see how much you can save, because I know the rental rates around here are extremely high. And so you can actually own for a lot less. So let's talk about this question, because I've been getting asked this, and I'm sure you have been getting asked this from agents as well, is what does it look like? So let's say you're on unemployment right now because your industry cannot work. And let's say then you can go back to work starting June 1st. Well, how are the banks and underwriters viewing that? I mean, so do you have to be back to work for another month to qualify in the same field, or what does that look like?
Well, it's really going to depend on the type of, or how the customer or borrower is getting paid. If somebody is salaried and it's a full salary, nothing changes, they're back to work, or they've always been a very consistent 40-hour full-time wage employee, then in an instance like that, we just need to have a current pay stub in order to be able to close the loan. They do have to be back to work. We do have to have a pay stub. We do have to know that everything is back to normal. If it's somebody that's had various hours where over the course of their employment, 1 week it's 30 hours, another week is 40 hours, and it varies constantly, then we would need to have a full 30 days back on the job. So 30 days, if you get paid twice a month, then that's going to be, 2 pay stubs.
Okay, so then let me just ask one more question. So if they went back to work and they close within 30 days of being back to work for 30 days, that counts?
We need to have 30 days of pay stubs before we close.
Okay.
I might not be understanding the question, but we need to have.
I just wondered, let's say they go back to work and they have their regular hours from their salary, and then they end up wanting to buy a house, and then we close 30 days after, and they've been back to work for 30 days. That's all they need, right?
Correct.
Okay, cool. So once they go back to work and then they've been there, because the closing is 30, 45 days. So then they'll have 30 days. And then when they call in for verification of employment at that point, then they'll qualify. So.
Correct.
And a lot of people don't understand that. A lot of times people think, okay, well, I applied and you ran my credit and you checked my income. A lot of people don't get that you guys do it again on the back end right prior to closing. And I always try to cautious people on that, right? Because we've seen some horror stories. Like, we can share all kinds of stories. Like, oh, you bought a car? What? And now you didn't qualify. Or you went out
exactly
furniture and you bought your whole new set of furniture for the house, and now you don't qualify. So that's one of the things we like to caution our buyers. If they're right on the cusp of qualifying, don't go out and spend any big ticket money while you're under contract on a home. So
exactly. Especially yours.
I know, crazy. So let's talk. We right prior to going live here, we talked a little bit about forbearance. Are you seeing clients calling in and wondering about forbearance, or what's been your experience right now?
Our branch, not so much. Right whenever it was first announced, we had 1 or 2 clients call in. My guess would be that most of the customers would be reaching out to customer service directly. We're not actually getting the calls here locally, so I don't know what the actual number would be.
Okay. Yeah, I was just kind of curious if you'd see a surge of that. I mean, it wasn't all it was cracked up to be when it first like kind of came out. I think there was a lot of confusion around it. And so, you know, because I had one client that actually ended up using it, but we ended up selling the house. So, you know, that worked out. But yeah, so it's just, I'm always like, call your mortgage lender and get the facts before you choose to do any of that. So
please, because there's a lot of different reasons why people would need it. If someone really needs it and they've lost their job, I do highly, highly encourage them to call in, because we don't want anybody losing their home. We want to be able to help them stay in those homes. Yep. But there is a lot of information that they need to have with regards to the process, how it works, what, you know, positive or negative ramifications that it could have. And the best thing to do is definitely call in and get all of that information so they can make the best decision possible.
No, that's awesome. So, so what information would you give to prospective buyers at this time?
As far as purchasing?
Yeah, what advice would you give?
Yeah, I would definitely say go for it. I mean, in the time that we're in right now, people are definitely spending a lot more time in their homes. Your office may be in your home, your staycation, whatever it might be, rates are low. There's very likely going to be a program that's going to fit your financial needs out there. If you're uncertain, just give us a call. I mean, there's great homes that are going to be available, and the interest rates are going to help keep those payments affordable.
Yeah. And you're not joking. I've had several calls too of people that are like, we need a bigger house. We need a bigger house. It's time to sell. And the inventory is so low right now, you guys, that homes are moving so quick. I mean, I've never seen it this low. And I just keep wondering if we're going to see a spike of homes come on after June 1st. But I mean, to be honest with you, now's the time to get it on, because you have no competition. The rates are still low. Buyers are out looking. They don't have anything else to do. And so we're still showing, we're still selling. There's been a lot of inventory moving. So, and some houses we're seeing multiple offers on. It just depends on the price range. So you're having to get creative and be competitive. And this is where Diane really comes in and helps guide the train, because we have to know, you know, what are the closing costs look like? What's the interest rate? How do we best negotiate to serve our clients to try to win those deals to get them in a house? So, and we work very, very closely with Diane just to make sure that our clients are winning those contracts. So, so what would you warn potential buyers? Like, is there anything they should be keeping an eye on? I know we talked a little bit about, you know, not buying things while you're under contract, maybe making sure that your hours of employment aren't going to change. I'm just trying to think, is there anything changing within the lending world while they're under contract that they should be aware of?
I haven't seen really anything changing while somebody is in the middle of a transaction that is going to negatively impact them from closing. Anybody that's already, you know, under contract, they're locked into a loan. Most of the guidelines that are set into place, I can't say never, because I mean, there's always that small potential. But typically, once you're moving forward on it, we're not going to see a change. Most of the changes that are going to happen, I believe, have already happened. And now it's just a matter of watching them and see kind of how everything gels out over time. And then as things start to lighten, then some of these overlays that they've done throughout the pandemic will probably start getting lifted a little bit. The most important thing for everybody to understand is just make sure you tell me or whomever loan officer that you're working with, tell them the whole story. Don't keep anything.
Well, she will find out. Just so you know, she will find out.
We will find out. And if something starts happening with regards to work or anything like that, let us know immediately. And the very biggest thing that you can do is just tell us everything up front, be open, get us the documentation. There are no secrets whenever you're buying a home. I will find out everything. Credit will be rechecked before closing, as well as income and all of that. So hugely important. and have patience. Please,
Yeah.
please, please, lots of patience.
So are you seeing many refis right now?
We are seeing refis, definitely. Interest rates are really good. I'd say probably not quite as many inquiries as whenever the rates first started coming down. They've been fairly stable for a while now. But we are definitely still seeing some refis, which are helping.
What's your advice on a refinance? So let's say you've got, I don't know, 4% rate. Because here's what I like to look at is there an opportunity or an advantage to move into a 15-year product versus a 30-year product? So you may be in a 30-year product, you have some equity in your house, the rates have dipped, and so maybe you're considering moving into a 15-year. So what's your advice on hey, how many points does your rate need to be lower in order for you to in order for it to make sense to do a refinance?
Well, there's going to be a lot of factors that come into play. In some situations, it may only be 0.5%. It's going to depend on the loan amount, the maximum payment that a customer feels comfortable with. While a 15-year can make a ton of sense, going from a 30 to a 15, if you've only been in the 30-year for maybe a couple of years, it's probably in most cases going to be quite a payment increase, and not everybody's going to be comfortable with that. But with that being said, there's other options too. There is a 20-year. So maybe a 20-year, you're still going to save a ton as far as principal over the life of the loan, but you might not see that same payment shock as going from the 30 down. Smaller loan amounts in most instances, whenever somebody's in a 30-year, they've been there for, 5 years, they've got a smaller loan amount, they want to go to a 15, then you're not going to see quite as much of a payment shock, and it could make a lot of sense. We are seeing some cash out refinances for a lot of folks, still with the rates low, doing some debt consolidation, paying off some things, getting down to just the mortgage payment will substantially improve their cash flow. In a situation like that, perhaps having the exact same interest rate that they have now, but improving their cash flow because they're paying off a significant amount of debt that's 18, 20%, is going to make good financial sense for them as well.
Yeah,
so there's a lot of different
money right now.
Equity to buy another house.
Yeah, exactly. Might want to buy an investment property and let that one cash flow. I mean, there's good opportunity out there right now. So definitely the best advice I can give everybody is, if you're wondering these kind of scenarios and what to do and what not to do, to reach out to Diane at Caliber, and she's got counterpartners there too. Her son, Ryan's awesome too. He can help run numbers, but just see if it makes sense, whether you should move to a 20-year or whether you should debt consolidate or get cash out refi. But again, spend that money wisely. If you're getting out of cash out refis, that's my best mama advice. Don't buy dumb shit. Sorry. So, I just, make good decisions with your money. So, but if you have questions, contact Diane and she can definitely help run numbers. Any other points or tips that you want to touch on today, Diane?
Oh my gosh. I think we've pretty well covered everything. Again, just if anybody has any questions whatsoever, for us to run you numbers, do any type of consulting, anything like that, there's no cost to it. So just give us a call. You don't have really anything to lose by it. Then that way we can help you. And then if it doesn't make sense, we'll share that. If it doesn't make sense to refinance, we want to look at what's going to be in your best interest. And again, just before we finish up, if there is anybody out there that financially is feeling that it's a huge burden, to please reach out so that we can get them in touch with the people in the forbearance department.
Yeah, no, that's great advice. So we love having Diane as part of our team. She's awesome to our clients and treats them like gold, you guys. And she's a wealth of knowledge, seriously. So if you have questions about what to do, contact Diane. You can always message me. I'll text you her phone number, her cell. I'm assuming you guys are not in office. You're working from home?
Correct. Okay. Hence the
artwork in the background, right?
Yeah.
Usually I have a gamer in the background.
Well, following all the rules and regulations here.
Are
yes,
you guys
all working from remote.
June 1st? Are you guys able to open back up June 1st?
as soon as I hear from Caliber what we're able to do, I will share with everybody. Yeah.
No, we're pretty excited. We get to open our doors back up June 1st. Obviously, there's going to be some, regulations with it, but I think some of the office gals are pretty excited to be back to a regular schedule in an office setting.
Exactly. We look forward to it.
Yep. And Diane's located here down by, oh gosh, what building? The Cannery. She's in the Cannery building, which is in Anacortes. And so, once she's back in that building, you can definitely make a face-to-face appointment. But I'm also assuming you're doing Zoom appointments too, or virtual appointments.
We can, whatever's going to be the most convenient for the customer. Most definitely.
You guys, the other thing I want you to know too, this is how easy it is to apply. She will basically send you a link via email or text, and you just can go online and apply. I mean, and then if you run into any questions or concerns about applying, you can just pick up the phone and call her, and it's a 15-minute phone conversation. I mean, that's how quick you can be pre-qualified for a home loan. So
no strings attached.
No kidding. And it's free. Remember that, it's free.
Exactly.
All right, Diane, thank you so much for tuning in.
Thanks, Kelly.
What a blessing to see your lovely face there, sweet lady.
Thank you. All right, we'll chat later. Can't wait to see you June 1st.
Bye, Diane.
Bye.